My general bias is definitely to the downside right now. So there's a lot of things that are now signaling that we will likely be headed towards a recession later this year. The signals, at least that I'm seeing, are actually very worrisome.
I think a lot of people just mistakenly think that the Fed will just come and save the day. I see this kind of dogma. Oh, don't worry, the plunge protection team will come and save the day. It's so short-sighted or myopic, which is unbelievable.
It is. Honestly, it drives me nuts. So the market just gets used to this idea that it can never, like, oh, it'll never go down. Or if it goes down, it'll go back to new all-time highs in 3 months. Like, you can see we have pierced it. And this is interesting because if we look at where the market is currently trading, we're kind of right in that mix on the weekly chart.
All right, guys, hello and welcome. In this particular video, we're joined here by trader and analyst Gareth Soloway of InTheMoneyStocks.com. I'm really interested to find out his views about the stock markets. What's his view about what's happening here on the chart, for example, on the major stock markets, the S&P? Does he think, for example, the market will continue the uptrend to new all-time highs? And indeed, if so, then how much further could we go? Or does he have a different view? Is he bearish on the stock market? So we shall find out in this video. All right, guys, join us. All right, guys, welcome back. Gareth, thank you very much indeed. There's been a lot of volatility, as I'm sure you know, Gareth, in the major stock markets. But I'm curious to find out what your view is. I've already made my views clear in previous videos here as well.
Yeah, so my general bias is definitely to the downside right now, and part of that is the macro picture that's unfolding. So we've seen, needless to say, some geopolitical issues going on around the world, but also, the economic news in the U.S. is starting to shift. We saw jobless claims just come out at the highest level since I think it was August of 2023. If you chart jobless claims, it's actually a breakout on that chart. And also we've seen GDP come in weaker here in the US. We've seen ISM services numbers in contraction. So there's a lot of things that are now signaling that we will likely be headed towards a recession later this year. I know everyone wants to believe in that perfect landing, the Fed nailing it, but the signals, at least that I'm seeing, are actually very worrisome, inclusive, by the way, of earnings season. We're just kind of to the tail end of earnings season, and more companies have warned on guidance this quarter than since the last time it was this heavy was at COVID's peak, right? When basically people thought the world was ending. And so there is something going on. The consumer is no doubt starting to pull back, and the backbone of the US economy is the consumer. So again, it puts me in a general macro bearish, which then makes me bearish on the stock market.
Before we go on to the charts, I was just going to mention that recently I noticed the S&P, when it was dropping, it pulled back. As a matter of fact, the S&P pulled back from its highs to a key level I watch on the chart, which is the weekly 21 EMA. The S&P pulled back to the weekly 21, held it beautifully, as a matter of fact. So overall, I think that, to my mind, the trend is still up.
Yes.
But I'm curious to find out. I mean, of course, if support breaks, then that's different. If support breaks, that's different. But I'm curious to find out what your view is.
Yeah, so for me, and again, one of the things I do is I try to catch the bigger market moves early on so that I can get paid out on my, whether it's options or stock shorts and so on and so forth. So for a couple things, and I'll show my chart here that I'm looking at on the screen, basically what we have here, this is the S&P 500. And so one of the things that kind of alerted me was we had this beautiful kind of wedge pattern that was broken. And this is, again, if we draw this in, we can see that price has broken below. So this was a trend. This was a very tight trend, getting tighter and tighter.
Good point.
That
yes,
has
absolutely.
now broken. And so as of now, I have to respect this high. This is your all-time high on the S&P at around 5265. And we are retracing, and you're right, the 21 EMA. In fact, I think the low was also a Fibonacci 236 retrace as well.
Yes, correct. Yeah.
But so those were both significant supports. The thing for me is, again, just wondering about whether or not the economy slowing takes it down. And as per charts, what I'm looking for here is we even have kind of a recognition that we have a little bit of a pattern formation here as well. And so we could even draw it right in here to watch to see, do we break above here and retest our all-time highs, or do we come down? And really what I'm looking for, and I think this is what you're talking about, is a break of the trend, right? So you have this trend line here, and if you take out this here, and then you take out the low, you would then have a high with a lower high and a low with a lower low. And that could really also be a continuation of a potential bearish move to the downside, a change in trend, if you will. Right now, we have a lower high, but we don't know if that's going to going to take out the high and make a higher high as well. So just to summarize, for me, I'm just generally slightly more cautious here. A lot of
Yeah.
the things that I'm seeing in the data make me concerned. Now, listen, the markets are rejoicing because interest rates are coming in because the economy is weakening. My worry is that inflation is still too high for the Fed to do much cutting. And I think once the market realizes and investors realize that the Fed can't just blow up a ton of money into the system again, that could be a breaking point for the psyche of the market.
You're absolutely right. I think a lot of people just mistakenly think that the Fed will just come and save the day. I see this kind of dogma, this kind of mistaken dogma in social media and even in mainstream media, which is that, oh, don't worry, the plunge protection team will come and save the day. So there's nothing to worry. The market will never do anything bad. The market will
That's
never
right.
crash. And it's so short-sighted or myopic, which is unbelievable.
It is. It honestly, it drives me nuts because
Yeah,
people. I know people want instant gratification,
yeah,
but if you just think about 5 years out or 10 years out, this
yes,
is like you do not want the printing. Like you don't want the market reminds me, investors remind me of a child where the parent is always there to catch them and never
yes,
lets them
yes.
fall. And so the market just gets used to this idea that it can never like, oh, it'll never go down. Or if it goes down, it'll go back to new all-time highs in 3 months, like during COVID. And
Yeah,
that's not a healthy thing. In fact, it
yeah.
reminds me of the 1920s of what's going
Mhm.
on with leverage and all these other things going on inside the asset markets that do make me very concerned for 5 years out from now.
I agree with you. No, you have a good point. I have a question here for you, Gareth. Supposing we do make all-time highs in the next several months or the next several weeks.
Mhm.
I mean, you did mention that your overall bias, that's I guess your long-term bias, I think you said is bearish. You're thinking that the market eventually will go down,
Mhm.
even if it can makes all-time highs. But my question is, if the market does make all-time highs, where could you see the level of danger be for a potential top in the market?
Oh, wow. That's a good
I'm curious
question.
about that. I have my own. I'm more curious to know what yours is.
Yeah. So one of the things to keep an eye on here is you can be looking at some various trend lines, right? And I usually
Yeah,
go to trend line analysis when I'm doing
sure.
these type of things. So again, this is a little on the trickier side to find these direct levels, but you can connect previous major highs on the market and you can draw a trend line connecting through the 2022 level. And again, it doesn't show us much upside potential here, a little bit. It
Yeah.
looks to me like that would be right around 5,400,
Mm,
5,375, somewhere in that
yes.
vicinity. But again, these longer term trend lines are powerful. In fact, if you take this one here, you can see we have pierced it, but we
Yes.
came in, and this is interesting because if we look at where the market is currently trading, we're kind of right in that mix on the weekly chart. And just something to watch for. Do we kind of push back up to this next level or do we stall here? But we did go above it and then we broke
Yeah.
back down below it. The other thing to just point out is that the markets, if we make a new all-time high, it doesn't necessarily make me bullish. And the reason I say that is
True.
because
Mm,
this pattern, this kind of M top pattern is so normal to markets, right? If
yes.
we look at this is exactly the pattern. And then you have the big dump that we saw on Bitcoin when we were looking at the Bitcoin all-time high previously. If we go back here, right? I mean, look at the pattern formation here on the daily chart right here. So we have M top and see, we did make a new all-time high before the big drop. And even on natural gas, and I know I'm jumping around here, but the point is, look at this pattern. See this pattern here?
Yeah.
And so that is something that, at least for me, a lot of people, if we do make an all-time high, will be proclaiming the next bull run. I'm going to be a little bit more skeptical here on the overall markets, even if we do make a new all-time high.
Yes. And as a matter of fact, I'm just curious. Let's just go back to that weekly chart of stock market again.
Yep, the
If you
S&P.
don't mind. Yeah. So here's my question to you, Gareth. I mean, obviously, bottom line is we always have to look at the market from the point of view of risk. That's why we
Yep.
look at different alternative scenarios. Because some people say in the comments on social media, oh, you're just trying to call it either way. So whatever happens, you can be right. No, guys, that's not correct. We're trying to analyze what are the possibilities, the probabilities, and where the risk
Right.
is located. But we usually say in the videos what our higher probability expectation is. But my question is this: you mentioned a few minutes ago that if the lows of April, which I think is about 49.50 approximately,
Mhm.
or 49.60, you said if that level gets taken out, we could potentially see a downswing. My question is, how much of a downswing how much of a downside potential can you see? Because we do have the prior highs, don't we?
Yes,
The
we do.
prior
We
highs of
do.
2021 before the drop in 2022.
That's right. So
Yeah,
you definitely want to, like, anytime you break out above a previous high, when you come back to that high, it will be some support, and that would be around 4,800 here. So
yes,
4,800 would be a big level. And then you do have this secondary high right here at around 4,600. So
true.
those would both be levels of support that I would have to monitor to see how price reacts. It might be a great opportunity for a swing trade long where you can jump long a few different stocks, maybe the market itself for a bounce, and then you just get out after a week or two of a bounce. But
Yeah,
really, the bigger, longer term level, I would take the COVID low to these lows right here.
yeah,
And this would kind of be my max drawdown of this move. Like, let's say over the next 6 months, if we really sell off, this
right,
would be a huge level of support, and that's around 4,400. So that's kind of my biggest,
right.
next 6 to 8 month drawdown would be maximum would be 4,400.
Of course, no, you have a good point, but that trend line, if you drag the chart to the left a little bit, I
Right?
presume that trend line is going to be rising, isn't it?
That's
More or
right.
less.
So
Yeah.
if I mean if you're right, and if it takes a certain amount of time, right, it connects through both of these levels. So you'd also want to be aware of that as well. And
Yes.
so that, if this is January of 2025, then these two levels coexist. And if it's earlier than that, this would be September of 2024 where these two would coexist at these levels. So you're right. You always want to make sure that those trend lines extend out so that you can see where they mix at the other levels.
Right. Exactly. So just to keep it simple, if it's an if, but should the stock market, or if the stock market were to break down below the lows of April, then you see the highs of 2021 near 4,800 or 4,820 as being a key
Mhm.
major support level.
That's correct. Yes, that would be my expectation. That would be the next. It would probably be a pretty quick move there to that
Mm,
level. So you break the previous low, there'll be a lot of stops that are right at that low.
mm.
Those stops get triggered, a lot of selling comes in, and
Yes.
then it pushes the market down pretty quickly to that next level.
And I should just make it clear, it's only if the market were to break below the lows of April.
That's
We're
right.
not saying it is, but it's something, it's a risk we have to consider.
That's right.
Okay, well, that's very interesting. Thank you very much, Gareth. That was really interesting and educational. Gareth, if you can tell everyone about how they can find out more about you and actually how they can take advantage of your services as well.
Yeah, sure. So we just merged In the Money Stocks with verifiedinvesting.com. So now it's verifiedinvesting.com. And really, I've made that a hub for traders and investors. So everything on that homepage is free on there. It has earnings dates, it has economic news, it has chart analysis, and there's just so much for an investor to take hold of there. And then obviously there you also have the advanced premium kind of stuff that I do, which is a commodity service, a stock service, and a crypto service. So definitely check it out. It's really amazing stuff. And you can always follow me on Twitter or on YouTube.
Thanks very much, Gareth. Really appreciate it. I'll put the links there, guys, so you can see it.
Verifiedinvesting.com, if you
Sure.
would. That would be so
Okay, no
nice.
problem.
Thank you.
Guys, go ahead and check it out. Thank you, Gareth. Really appreciate it. Cheers.